And joining us now on the debate in Winnipeg, Manitoba, Craig McIntosh. He's the CEO of Acrylon Plastics. In Chicago, Illinois, Donald Coxe, strategy advisor at BMO Financial Group. And here in studio, Dene Rogers, the CEO of Sears Canada. Janine Chapman, marketing director of Sunwing Travel Group. And Jim Menzies, national leader, manufacturing and distribution at Grant Thornton LLP. As I welcome everybody, both here and in Points Beyond of the program tonight, let's start with three analyses, short ones, of where they think the strong loonie is going these days. First one from the Conference Board of Canada. Canada's solid banking system, solid domestic economy, relatively healthy fiscal situation, and wealth in raw materials will continue to support a strong loonie. Second one from the Royal Bank, that the Canadian dollar at and through parity will prove a longer-term reality for Canada than it was in 2007. Third one from Scotia Capital, our longer-term view of the Canadian dollar is for appreciation to continue over the next 6 quarters. Oil and commodity prices are also strong drivers of the Canadian dollar, and we currently foresee a relatively robust outlook for both. Okay, that's a bit of a cross-section of where some people think the loonie is and is going. Don Coxe, let me bring you in to start with. I know there are obviously winners and losers depending on what currencies do, but on balance for Canada, is a dollar at par with the United States better or worse for the country?
Well, if we're all consumers, those who are living in Canada, and so therefore a strong currency means that you have lower inflation, and it means that domestic prices tend to be lower because there isn't cheap foreign competition, and it means that things you want to buy from abroad are cheaper, and it means that when you travel abroad you can do more on your dollars that you have on hand. So therefore a strong currency is something where virtue is its own reward, but sometimes what that means is there are some losers, and those are producers and distributors within the country. And Mark Carney, Governor of the Bank of Canada, is trying to keep the dollar from not going above par because he's concerned about promoting economic growth and creating jobs. But the winners from this are those generally of Canada because their cost of living will be lower and their options about travel and enjoying the world are improved. That's a pretty good trade-off.
Okay, let me, as a follow-up to what you've just said, ask our director to bring up our first graph of the evening. And this is exports as a percentage of our gross domestic product here in Canada. And we're always talking about ourselves as a trading nation, but that blue line is going south from a reasonably high number in 2000 down to the end of the decade, 2009, down where it is. GDP dropping almost 18% in the past 9 years. And we obviously have not had a dollar at par during that whole period of time. So Jim Menzies, let me go to you on this one. Does the high loonie have a different effect on the export economy today than it did a decade ago?
I think that the manufacturers that I work with primarily there's mixed views on that question. I think that Canada in today's marketplace is starting to focus more significantly than they have in the past on looking for new sales, new customers, new business outside of Canada. And as a result, a higher exchange rate or a higher loonie causes some difficulty there. If you're, in the past where we've had a lot of manufacturers and distributors that have imported into Canada, the high dollar would be a good thing for them.
Right.
But for the companies that are really trying to expand, and it's a real issue for them now because with the economic crisis that's taken place in recent times, the U.S. market has shrunk, some believe permanently, so as has the Canadian market in some people's belief. So they have to go outside. You have to go outside in order to find the real growth. As soon as you go outside, you're in that foreign exchange game. You can't get away from it. You can't choose not to play. You have to be there. And a high dollar is not a good thing for those manufacturers that want to sell outside of the country.
Janine, a follow-up with you, because I think people remember a few years ago the dollar was at par once again for a little while, then came back down. How is today's buck at par different from the way it was 3 years ago?
Well, for us, this is a very good situation. Right now, what we're seeing is that For many of the components of our packages, the American dollar is almost all of our hotel component is in American dollar, with the exception of Cuba, and our airline costs are purchased in US dollars. 40 to 50% of what we see in terms of airline costs is comprised of parts, fuel, and so on. It's a good thing for us. What we need to be careful of is that we both hedge the currency and hedge the fuel, and they tend to counterbalance each other. They have an inverse relationship.
Well, would it be better for you if the Canadian dollar was actually worth more than the American dollar?
It would be on a short term, as long as our economy can withstand it, because until it starts to affect things like the employment rate, it's a positive thing. Right now, travel intentions are high for Canadians, and the economy is in good shape, which is fantastic. So in the short term, it's a very good thing for us. Okay.
Craig, give me your experience out of Winnipeg. What the dollar at par means what for you?
For us, it means a change in how we do our business. 3 years ago, when it hit above parity, we really got caught with our pants down on that one. So now we've returned our business to more domestic business. We did an acquisition last fall to increase our Canadian sales. All of our purchases of raw material come in U.S. funds, as well as selling into the U.S. So we've pretty much prepared ourselves, whether it's at parity, above parity, or below parity. Any one of those scenarios we're ready for us, and that's been making us successful today.
Craig, speaking of selling into the U.S., did you have a particularly special sale to a particularly special American customer? I think you know what I'm getting at.
Yeah, I know what you're getting at, Steve. One of our customers sold the play structure to the Obama family that's on the White House lawn, so it's certainly a point of pride in our company, and we're very pleased about it. It happened a year ago, and we're still getting lots of people like you interested in that, and it's very exciting for us.
Now, did the Obamas ask you what the Canadian dollar was trading at that day before they made that purchase?
They don't know, because our customer is American, so they probably don't. I think now they know, because Gary Dewar's the ambassador to the U.S., and he would have told them that I came from Manitoba.
As a good Manitoban, he would have done that.
As a good Manitoban.
Indeed. Okay, Dene Rogers, your business at Sears, how's it changed given the fact that the Loonie's at par now?
There's good news and bad news. The good news for us being a larger retailer is we often buy in US currency, so we're able to buy product cheaper and we pass those savings on to the customer. So that's good. The bad part is that more Canadians are shopping in the US, either via the internet or traveling to the US, and that was a trend that began in 2007. It's been repeated again just recently with the appreciation of the dollar. In fact, Canada Post says small parcel deliveries from the US are up 6% in the last 6 to 8 months. So that affects most retailers in Canada negatively, and especially smaller Canadian-based retailers that can't afford to hedge or don't know how to hedge the currency, who are buying product in Canadian dollars. It really impacts them very negatively.
This is a couple of times we've heard this expression, hedging the currency, and I want to go to Donald Coxe in Chicago on this just to explain, again, a little economics 101 here. When we talk about businesses in this country hedging the currency, what are they referring to when they say that?
Okay, if you're somebody, you're going to be selling something into the United States, and you've got a price on the Canadian dollar where it is now to the US dollar, you can lock in that price by arranging with your bank to buy or sell currency forward, whichever way you're going, and then you can guarantee that you break even on that. And or the other thing, which I've been telling Canadian companies to do for the last 9 years, is they should do the maximum amount of borrowing they could do of their bank loans in American dollars. And what they do then is, as the Canadian dollar goes up, their debt loads go down. And a lot of companies have in fact done that. So you can hedge your debt liabilities, but most people it's their transaction liabilities, and you can do that with your own bank anytime when you've got money that you're going to be getting in the future or delivering in the future.
Jim, do you advise people on that?
Well, I think the important thing to realize with respect to hedging is that it doesn't make the problem go away. If there's a high loonie, there's a high loonie. You don't enter into a hedging contract at a very low rate and therefore take the foreign exchange rate out of the equation. What it does is it gives you certainty. It tells you that at some future period of time, you're going to either receive or buy US dollars, in the case that was just described, at a particular rate. But that rate's not necessarily going to be an advantageous rate for you. And the other thing on hedging as well that really gives problems to the finance folks within manufacturers that I work with is that it's a double-edged sword. If you enter into a hedge, and it so happens the exchange rate goes in an unfavorable fashion, it makes you look good. You say, oh, well, I've done a good job here because I hedged at a rate that was different or better than the rate that I would have otherwise had to pay for that foreign currency. But if it goes the other way, then in effect, people start scratching their head and almost blaming you for the fluctuation in the foreign exchange rate, when really all you've done is try to add some certainty to the equation.
Janine, you got people on staff who do this hedging business?
Yeah, absolutely. I mean, we monitor daily. We put our product on sale quite often a year in advance, which means that we're not actually, I suppose, paying the U.S. fund piece for possibly a year or longer from the time that we put it on sale. So what ends up happening is we gradually sell our product, and as we change our hedging, we end up having mitigated our losses. So what it really does is help us, is exactly as Jim says, it helps us to mitigate losses and to know our cost base. It doesn't always, we don't always hedge favorably, no one does.
Okay, but Dean, tell me this, you're in the business to move product, right?
Mm-hmm. Sell product.
Right on. Does this take away, this having to be so focused on what the currency is doing and hedging this way or that way, does it take away from your quote-unquote core business?
No, not at all. I think it's critical to our core business. So if we can buy US dollars cheaper and therefore buy the product cheaper, we can pass it on to consumers at a lower cost. So it's good for our business. It's very critical to our core business.
Craig, you don't do any of this anymore, is that right?
10 years ago we used to, then we stopped, and we've driven our business into what's called a natural hedge, where as many dollars as we collect from U.S. customers, we try to pay out for purchases in U.S. funds, and that's worked out exceptionally well. Again, that's why I don't care whether it goes up or down or in between. We don't have to do hedging because we built a natural hedge to do it.
Okay, Don Coxe, you've been giving people advice on this kind of thing for a long time. A, are they taking your advice? B, do you think businesses, generally speaking, are kind of well equipped to deal with all of these currency fluctuations?
Well, I can tell you that, as I say, I started 9 years ago when the Canadian dollar was low, telling everybody when I go and speak to Canadian audiences it was going up. And what I would discover was, and when I was giving the presentation on everything else, they would agree with my bullishness about the stock market, but as soon as I said the Canadian dollar would go up, I would sense that at that point they lost confidence that I knew anything about anything, because the Canadian inferiority complex was so strong. So for me, the best thing about, well, apart from being right and apart from the fact that I've tried to have as much of my money in Canadian dollars as I can, what I see is that the rise in the value of the loon has been reflected in a better feeling of the Canadians I talk to about how the country is and relative to the U.S. And when they look at the U.S. dollar going down and all the deficits going on in this country, something akin to Canadian smugness, not something I've ever seen before, is emerging. I think it's a good thing.
Well, we saw some of it at the Olympics, so we can't say we've never seen this before. But no, I hear what you're saying. Janine, I mean, does the national pride puff up a little bit more when our currency goes up? Do you see that in your business?
Yeah, no, I think we see that. I mean, one of the things that affects us, I think, is travel intentions and where people are traveling. At the moment, domestic is very strong, so people traveling within Canada, we're seeing really strong sales. And of course, because of the appreciation of the Canadian dollar, we're seeing a lot of sales into Vegas and Florida and Hawaii.
Does that go up? When our buck goes up, do you get more people going to Vegas?
Definitely.
It does happen that way.
Yes.
How about now, what about you and your business? Are you?
Yeah, we have a travel business as well.
Yeah.
And the same as Janine is describing. The travel business is up largely because of the strong Canadian dollar.
And Jim, I don't know if you see this in your business as well, this sort of issue of national pride when our buck goes up?
There's something related to that we definitely see, and that is that a lot of the braver Canadian manufacturers, not just to deal with the foreign exchange issue, but as part of that, will open up shop in the other country that they plan on selling their product into. So instead of making it here in Canada and then selling it into another country, they actually set up a plant in the other country, produce the goods there such that their costs and their revenues are in the same foreign currency, and that minimizes the fluctuation and is going to impact your costs and your revenues to the same degree. Now, it becomes an issue when you want to take the profits out of that country and bring them back to Canada, but you can control the timing of that a little bit such that, you know, when the exchange rates are favorable, that may be when you choose to bring the profits back to the country.
Gotcha. Let's bring up the next chart that we have. Here's the Canadian versus the U.S. dollar since November of '09 over the last few months, and we've seen the value. It's skipped around a bit. That chart The line on that chart's moved around quite a bit, and of course we're up at the high end of it right now. The buck's gone up, the buck's gone down, and I want to get a sense, and Don Coxe, I'll start with you first on this one. What's worse? Let me put it that way. What's worse? A high loonie, a low loonie, or a simply unpredictable, very fluctuating loonie for business?
Well, the latter is the last of those things. If people sense there's no direction in it at all, then what they're not prepared to do is make good commitments, the kinds that undergird strong economic growth. People can learn to live with currencies as long as they got a sense of the direction. What is important is that the currency acquires some face on it. And the euro is losing its face at the moment. The American dollar is losing its image as the soaring eagle, and the yen is disappearing down a demographic black hole. So that what people are looking at now is that this is part of the sense that Canada is a good place to do business in. This will inevitably have the effect that the price-earnings ratio over the longer period of time on the Toronto Stock Exchange will go up, which means the value of money in RRSPs and pension funds will go up. Virtue is its own reward in this sense that stock markets of countries with strong currencies tend to have higher price-earnings ratios because people are willing to put their money in from abroad. Because if you're sitting in Switzerland and you've got your money invested in Canada and the Canadian dollar collapses, you're likely to lose your clients. I've been told this by so many bankers over there, and they say, why did you take that currency risk? So the answer is that there are all sorts of hidden benefits that come from this. So as the loon is seen to be a strong, viable industrial currency and not just a commodity play, what that will mean is lower interest rates, more capital flowing into Canada. Those aren't the things, of course, that you'll hear screams about. And of course, it does hurt things like the Stratford and Shaw festivals because of tourism. But on balance, what it means is, I particularly say, for pension plans in Canada, this is almost unalloyed good news.
Let me get Dene Rogers on that. What's the worst thing for your business? A low loonie, a high loonie, or a really fluctuating loonie?
I think it's probably a high loonie and a fluctuating loonie. I think right now some of the costs associated with Canada and the lifestyle that we have in Canada, minimum benefits, wages, import tariffs, etc., mean that if the loonie stays high, that I think that it'll lead to less investment in Canada. So I think, you know, a loonie that's less than 90 cents is best for Canada in the long term.
But not below what? Lower than 90, but not below?
I'm no expert on this, but I would say fluctuating between 80 and 90.
Between 80 and 90
would
works
be
for you.
would be the best, and north of 90 would be unfavorable, and then fluctuating in general would be unfavorable.
Craig, where do you come down on that score? A low loonie, a high loonie, or a heavily fluctuating loonie? Which is the worst thing for your business?
The heavily fluctuating is absolutely horrible for us. I'm more with Jim that give me a trading range and stay in that trading range, and we can manage wherever it is, up or down. But the fluctuation is typically our business is once we quote something today, it will be out there for 4, 5, 6 years at the price we put out today. So really we have a long-term embeddedness in wherever the loonie is on a given day in terms of our long-term of our business.
And Janine, on that scale for you?
Definitely a stability in the currency is good for us. Because,
everybody likes stability, don't they?
Well, absolutely. It evens out our competitive playing field because when it's stable for a long period of time, everyone's in a similar position in terms of cost base. And it also allows for planning. So not only, as I say, because the effects on the currency is changing travel intentions and where people are planning on going. For us, we contract Cuba and Canadian funds, which makes it different than, for example, Dominican Republic or Mexico. So if we know where it's going to be at, then we know that Cuba might potentially be considered higher or lower compared to the other destinations.
Gotcha. Don Coxe, you said a few minutes ago that the Canadian currency had a strong face to it right now. I think that was the word you used, a face.
Yes.
The euro not so much anymore, the US buck not so much anymore. Who's got the prettiest face in the world right now in terms of currency? What's your view on that?
I would have to say that the two prettiest faces in the world are Canada and Australia at the moment. Australia, because what it's seen as is the virtually low-risk way to play China, because the Australian dollar keeps going up as their sales of things like iron ore to China keep going up. And also, everybody loves Aussies generally, and they're also got a benign climate. So the Aussie dollar has been terrific, but Canada, the Canadian dollar has a terrific image now because of the perception of stable government, low inflation, a strong central bank, a good banking system. In other words, common sense. And that idea that Canadians know how to do things better and manage things better, that has a wonderful overall effect on their willingness to buy Canadian assets. As I say, it reflected back in their willingness to buy debt instruments from Canada and Canadian stocks. There's no question in my view that that will mean that the total cost of funding pensions in Canada over a period of time goes down when the currency is seen as strong and you've got that good face on it.
I just want to pick up on that everybody loves Aussies comments that you just made. Dean, where's that accent from?
It's from Australia. It's the first time anybody on camera has ever said they love me. So thank you, Don.
Apparently you are loved. Apparently. Can you feel the love coming from Chicago right now?
I do.
I thought so. Craig, you told us a moment ago that you hate it when the currency fluctuates, and I want to get some better understanding of whether or not, or what you do actually to try to sort of stay ahead of the curve here in, I don't know if speculating or anticipating is the right word to use, in anticipating where the currency is going in the months ahead.
For us, we're looking at what we can do to protect ourselves. We're believing it will be at parity for a long time. We price our sales today at parity. Any new acquisitions are at parity, and that's what we're trying to do, protect ourselves for the long term. If it goes back to 85 cents, it's a bonus. If it goes above parity, then we have to readjust a little bit of our thinking. But I don't believe in the long term that Canada is fundamentally stronger than the U.S. This is more of a weakness in the U.S. than it is a strength in Canada.
How many people you got working for you now?
250.
And how many of those will you either have to hire or fire on the basis of what the currency does?
We swing more by economics, so our low was about 175 at this time last year. So we've rehired people that were laid off, and now we're into net new hiring at this point because we continue to see strong demand for across all of our product lines.
But that's the gist of my question. How much of that hiring is because the Canadian dollar is doing so much better, and how much of it is, is because of the other economic demand aspects you just mentioned?
It's more economic demand aspects. The kind of business we're in is not seasonally adjusted or anything related to the currency itself. It's one of the factors. Plastic's made out of petroleum, so the price of oil has a much more dramatic impact on me than the price of the currency at this time.
Gotcha. Jim Menzies, Canadian manufacturers in general, are they learning to adapt to a dollar at par?
Well, I think it's a real interesting issue that they're struggling with, and you talked before about the impact. What's better, a higher or low or a fluctuating one? I think fluctuating currencies are that's just a necessity. That's going to be the case. I don't think we're ever going to be in a scenario where we can say with any great certainty that the currency is going to stay at a particular rate. I know most people for the past year or so have believed that the Canadian dollar would be high in comparison to the US dollar in particular, and that's turned out to be correct. But you had quoted the Conference Board of Canada earlier, and you don't have to go back very far. You go to 2002 when the Conference Board of Canada and a bunch of other think tank organizations were suggesting that at the end of 2002 the loonie wasn't going to go anywhere above 65 cents. And lo and behold, within 6 months, in the middle of 2003, it was already at 75 cents. So the ability to predict where it's going to go is it's very volatile.
I should say to the viewers as well, you did that very skillfully, given that your earpiece popped out in the middle of that answer, and you kept going straight ahead without a pause. That was very impressive. Don Coxe, we talked earlier in the program, before this debate started, about how the Chinese government is sort of intervening itself in the marketplace to, some say manipulate. They would probably not want to use that kind of language, but let's for argument's sake say manipulate their currency. I wonder whether you think the Bank of Canada should be intervening to put an end to the major fluctuations we're seeing in this country on our loonie.
First of all, I think it's outrageous to say the Chinese manipulate their currency. They manage it. They've helped the global economy dramatically over the two big financial crises of 1997 and 2008 by their stable currency approach. I think they deserve a pat in the back, not a kick in the teeth on that. But as to what can be done, it's a very limited range of things can be done. Mark Carney knows that. But I think there's too much of the discussion here assumes that par is something like a lid. What you got to understand is that I've just told you the two most attractive currencies in the world are Canada and Australia, and they together amount to about 4% of the value of currencies. The currencies that are in trouble and going down and are going to have more problems are the euro, the American dollar, and the yen. And as people see that, and we're talking about that the Canadian Aussie dollar looks so good, I think the risks you have to all face is the amount of money that could be pouring in on the basis that there's nothing serious that can be seen to go wrong in Canada, unless of course it was an NDP government. But and that, so therefore the risk you should think of is on the upside, that every currency trade is like a teeter-totter. When one goes up, the other goes down. 80% of all trades in currencies, the US dollar is on one side. I can tell you, living in Illinois, which is facing something close to bankruptcy, California is on the edge of bankruptcy. This country has much more serious problems than anything Canada's had in, since the Depression. So you've got to take the possibility in your thinking of a risk of unimaginable amounts of money that want to get into Canada, rather than thinking that, oh, the Canadian dollar is high at par. No. I mean, that's like the old notion that when buildings started to be built, when they discovered the elevator, you went and built a skyscraper 7 stories high, about as high as a building ought to go. They got a lot higher.
They did indeed. I'm tempted to ask Dene Rogers whether he lies awake at night fretting about Jack Layton becoming Prime Minister, just based on the follow-up answer there, but maybe I should ask that. Do you lay up at night worrying about the NDP forming the next government because of what that might do to your business or the currency?
I'll just give a one-word answer to that, no.
You don't? Okay. Are you hedging your bets against the loonie right now?
We have a hedging program in place, yes. I agree with Don's point. In the early 70s, the dollar traded above parity for several years. It spiked in 2007 at $1.10. So I think it's possible that it'll trade above parity, but I think as Don alluded to, Bank of Canada is interested in keeping it below parity. I'm not sure that they can, but I think that that will be the intention.
Would you, and you would support those efforts to do so if that were the case?
I think, yeah, I think Canada's best long-term interest is somewhere in the 80s range.
Janine, how about for you? Would you like to see the Bank of Canada intervene more or less to do what with the currency?
Well, at this stage, I think that because the conditions are so favorable for us, I wouldn't necessarily say that we'd like to see them intervene. But on the long term, as I say, that if the Canadian dollar continues to appreciate and even goes above parity, then the effects on the economy will eventually trickle in to affect travel intentions, and that won't be good for us.
You're hedging your bets on the dollar, I presume?
Yes, we
are. Which way?
Which way are we hedging our bets?
Exactly. You think it's going to get dearer or cheaper?
At this stage, I think it's probably going to get dearer.
So it'll be, at some point you see it going above the American dollar?
Yes.
And that's not bad for business either, is it?
No, it's not.
Okay. How about Craig? How about you in Winnipeg? Which way do you see it going?
I'm not concerned about the dollar. I'm more concerned about inflation and interest rates. I think those are what the Bank of Canada should focus on, particularly inflation, because that can be driven in this thing terribly, and that has a much bigger impact on our business, being inflation, and then secondly interest rates. The dollar, the Bank of Canada can only control one of those three, and I'd rather have them focused on interest rates than I do about in inflation than I do about the currency value.
And when you say focused on interest rates, you mean you want them kept low?
I'd rather keep inflation low, and if that means interest rates have to move back from today prime at 2.25 to maybe 4 or 5%, I'm okay with that. If that can keep the inflation around 2.5%, that's far more better for our business, because if we talked about stability of the currency, really we want a stability of our costs as well, and a lot of our costs are in Canadian funds, and inflation just is really bad for everybody.
Okay, let's do, you want to do this chart here, Michael? Canadian dollar versus the euro? Look at this curve. You want to talk about a smiling face on the Canadian currency? Here's another graph that reflects that. Look at that red line, up and up and up and up and up. Now again, Don, I guess I should ask you, is this a reflection of the fact that the Canadian dollar is so strong, or that the euro is, relatively meek right now? What would you say?
Well, that's the point, you see, is when you talk about it, you shouldn't just talk about a currency being strong or weak. You got to say against what? You know, I saw your wife last night. She's beautiful. The guy saying compared to what? And what we've got is that the alternatives to the Canadian dollar look pretty miserable. And so a huge part of what's going on here is people saying, well, it may not be that Canada's so great, but it ain't so bad either. And, you know, the Fed has tripled the monetary base, which ordinarily would take about 40 years to do. And we've got deficits down here in the trillions. And then you look in Europe where they've got the pigs that are going to be more and more of a problem. And in Japan, they're producing every year more morticians than obstetricians. That's a fact. And so you look at it and say, gee, I want to have something. If I was buying a 20-year bond, I mean, it is a far safer investment to buy a 20-year Government of Canada bond than it is to buy a bond from any of those other regions. And as soon as you start thinking of that, you're talking now about huge amounts of capital that could come in to stay.
Every time you say something, you tempt me to ask a follow-up question that's a little bit sassy. So let me, are you married?
Of course. Yes.
You are. And your wife knows you talk about her this way on television?
I was using an old 20s joke.
Okay, I gotcha. I gotcha. Okay. Jim, how about to you? What are you telling your clients about what you think the Loonie's about to do?
Well, the chart that you put up there was interesting in terms of the trend with the Canadian dollar and with the euro. As I had mentioned earlier, there's a lot of manufacturers that they're looking to expand into what we'll call the emerging markets. That's China, India, and the South American countries. And I think what happens in terms of the strength of our currency against those countries' currency will have a big impact on the success of our manufacturers here in terms of their expansion of sales, if you will. For the past couple of years, manufacturers here in Canada have been thinking of two things. A, can I stay in business? And B, how am I going to recover the lost revenue that I've lost through this crisis, and how am I going to continue to expand it? Many of them are looking to these emerging countries, and I think the currencies, our currency in relation to those emerging countries' currencies is going to be critical in terms of how successful they are.
Got a few minutes left here, and I want to bring one more thing up, and this again from the Conference Board of Canada. Michael, let's go to this graphic if we can. The first option is both easy and extremely painful. Do nothing. If Canadian firms, and the entire economy for that matter, fail to respond to the upward structural realignment of the Canadian dollar, they will slowly lose their international competitiveness and eventually contract what is called Dutch disease. Dutch disease is the loss of international competitiveness due to a stronger currency that is pushed upward by higher prices for key commodity exports. In the case of the Netherlands, the guilder was pushed progressively higher during the 1960s and 70s by revenues from the sale of natural gas from the reserves in the North Sea. A rising guilder gradually eroded the competitiveness of Dutch manufacturing, which did not adapt quickly enough to the new exchange rate reality, hence the name Dutch disease. Okay, we've got a very high dollar here. I wonder, Dene, I'll start with you on this one. Are you concerned that we're in danger of contracting Dutch disease?
In the Canadian economy or in retail? Yeah, I am. I think it's a matter of reacting to an environment where the Canadian dollar is strong and making sure that Canada remains competitive and working on improving the productivity, etc. I think if that's not done, then the disease will develop for sure. And I think we've seen that over the last 3 years with the shrinking auto industry, lumber industry, manufacturing base in Canada.
Craig, do you worry about Dutch disease in Manitoba?
No, last time when it ran in 2007 up to above parity, what we saw was American manufacturers suddenly looked at Canada and saying it's an attractive market. When they showed up here, whether you were making mobile homes, they showed up and said, okay, we'll run the factory for a couple more hours and meet the Canadian demand. And many segments of the Canadian manufacturing market disappeared because of the strong currency. So for us, 95% of what we make leaves Manitoba, and we have to be competitive against Americans and people from around the world.
Gotcha. Janine, Dutch disease, you worry about it?
No.
Period, full stop?
Yes.
Okay. Jim, how about you?
No, I don't think so. I think there's so many factors that weigh into foreign exchange rates that we're not really sure that the loonie is going to go up or down. I think that the popular belief right now that it'll at least stay on par with the US dollar is probably right, but you know, as I said before, the Conference Board of Canada can be very wrong, and if they can be wrong, so can we, and so can many Canadian companies.
Absolutely right. Donald Coxe, how about you on that issue of Dutch disease for Canada?
I think the nightmare could be a new disease, Dutch-Swiss disease, where you combine the Dutch effect of the commodity currency aspect with the Swiss disease, which happened in the 70s, where the Swiss franc went to high levels, and it nearly wiped out the Swiss watch industry because it was a strong financial currency and people wanted a haven. And so they packed money into Switzerland. Switzerland had to put a tax on earnings in bank accounts if you were a foreigner, if you went to a Swiss bank. I'm telling you that the risk Canadians should think about is Canada is putting so many virtues together here at a time when these other areas of the world are looking collectively weak, anemic, or syphilitic, depending on your viewpoint. And so the possibility that arises is that Canada will have those two forces coming together, that these two things for which it's the strongest and best known are the things that could drive the currency to levels that would be very tough on Canadian manufacturers.
That is the always quotable Donald Coxe, strategic advisor for BMO Financial Group out of Chicago. We also want to thank Craig McIntosh, the CEO of Acrylon Plastics, for joining us in Winnipeg, Manitoba, and to our guests here in studio, Janine Chapman from Sunwing Travel Group, Dene Rogers, Sears Canada on the outsides, and Jim Menzies from Grant Thornton LLP in the middle there. Thanks everybody very much for this discussion tonight.
Thank you.
Thank you.